folks. Alrighty, I'm going to blow your mind in this one, all right? So, me, as far as me on YouTube, right, I think one of the reasons I've been able to be successful over time is obviously I don't have fancy edits. I don't have any of that nice stuff to bring to the table, right? All I have is my perspective and some stuff to open your guys' eyes from time to time that you probably aren't seeing other places. And, subjects like interest rates, right? How much is the Fed going to raise? I feel like that's just information you can get anywhere. And I feel like one of my things I bring to the table is I bring up different metrics than you've ever seen before or that are commonly talked about, right? Or I show you some stuff that you're just like, I've never seen things like this talked about before, essentially. And I can guarantee you the stuff I'm about to show you in this video, less than 1% of the people watching this video right now, you have any clue about what I'm about to go into here or are really up and up on this, okay, essentially. And so we'll get into all this. This is, like I said, different outside the box. Let me know in the comment section if you guys enjoy stuff like this. This is not the type of stuff for the masses. I can tell you that. Going nitty gritty into this type of stuff, this is not for the masses. And I'm going to probably lose some people in this video with kind of like their brains being blown with just like, this is way outside the box, right? But for my folks that you really like to get into this crazy stuff, like I hope you really enjoy this here today. And also check out my crypto partner, FTX US down there. First link in the description. Sign up for an account and use the referral code HolySmokas. Get a free coin when you trade your first $10 on there, okay? So this is out of Craig Fuller. This is his Twitter page, essentially. Craig Fuller I would describe as almost like a supply chain expert. I guess that's the best way you can put it. Somebody that knows a lot about supply chains and the trucking industry and those sorts of things, okay? And so he a couple days ago, he had some really interesting thoughts around what's going on with data, and not just thoughts, but using data to kind of determine what's going on here with trucking. Okay, this is very, very important because we could be on, this is something I think every single person watching this video should pay attention to moving forward. And the reason being is this is a type of thing that can, if you're thinking about the potential recession, if you're thinking about us getting into some trouble, very important to pay attention to this, okay? Craig Fuller says, quote, "The driver shortage narrative over the past 2 years has caused the largest amount of startup trucking fleets in history. This is not a meme stock. These are actual entrepreneurs that have started their own trucking company, okay? And yeah, it's gone absolutely insane in terms of the total count of new fleet authorized for hire. Wow, yeah. If that was a stock price, I'd be buying that baby, right? And when it comes to trucking industry, it has been red hot for the past about 18 to 24 months or so. Basically, after we came out of the Rona lows, things just started skyrocketing. Obviously, 2021 was a great year for the industry. I mean, a phenomenal year. Most are unprepared for what is about to happen. Trucking is violently cyclical. Cyclical means it's an up and down market, right? No different than memory prices, no different than automobile sales, even new home sales, things like that. Very, very cyclical industries. The steel industry, aluminum industry, commodities, they can be very cyclical where they go through some huge boom cycles and some huge bust cycles, unfortunately, right? Trucking is violently cyclical. The boom and bust are legendary and happen every few years. Freight volumes are dropping quickly, off 15% since mid-February. Trucking spot rates are declining faster, 25% drop. And yeah, the chart's pretty self-explanatory there, okay? And that's where I like this, where it's not just opinion, but it's actually using data to kind of show what's going on out there. And when you see something like this, a little scary. With all the new entrants and existing fleets growing, the industry has grown capacity by 10% since pre-COVID levels, okay? By the way, we're going to look at all this here, okay? And a lot of this is bad news, but specifically, this can actually be good news for some companies out there, and I will get into that in just a moment here, okay? The amount of tractors from fleets authorized for hire, right? Number has obviously skyrocketed over the past year or so. I mean, to just insane levels. Operating expenses for fleets are way up as well. A fleet that was around before COVID would be seen as a minimum of 15% cost increase or 38 cents a mile. A new fleet starting out would have costs that are around 72 cents a mile more than pre-COVID levels. About half of the cost increase is fuel, okay? Just absolutely gone through the roof, and that's obviously not a good situation. Insurance and maintenance expense also shot up, but the biggest increase has been equipment prices. This is the cost of a 3-year-old used truck. Semis have gone absolutely off the charts in terms of how much they've increased. And I mean, when you think about it, if you paid attention to used vehicle prices in general, right? Just used car prices have gone up insane. All this stuff is like not sustainable, right? You know this is not practical, you know this is not sustainable, but it's all been going on. And used trucks, if you're trying to buy a used truck, you are paying through the nose right now. Like, it's absolutely insane. Absolutely insane. The last freight recession was 2019. There were thousands of bankruptcies during that year. The lowest spot rate that year was $1.91 a mile. With additional operating cost increases, I would expect if rates drop below $2.50 a mile, we will see similar levels of carnage, okay? Now, this is kind of scary because you're looking at a situation here where, and I think I pulled it up closer here, we've been, obviously, if you're a trucking company, you've been very, very profitable since about summertime of 2020, essentially, right? And 2021 was an incredible year to be in the trucking industry. I mean, absolutely knock your socks off, incredible. But the problem is we're starting to go the wrong way, and we're starting to go the wrong way quite rapidly since basically the start of the new year, right? And a lot of people are looking at this and like, are we just kind of at the beginning stages of this? And if you're a trucking company, this trend that you got going on basically this whole year so far is not going in your favor. And as this gentleman points out, if we go under 250, that's when a lot of these carriers could start going bankrupt, which obviously mean a lot of jobs lost. That can mean obviously loans that aren't repaid. That could get messy very, very quickly. And keep in mind, if you have a dry up of shipping in any way, right? That could be a situation that companies start competing against each other harder than ever, right? And the next thing you know, prices just kind of keep dropping, because if you got to keep the lights on, you'll do just about whatever, price that can make financial sense. And then if there's no price that makes financial sense, then you pretty much have to shut down operation. And that's no bueno, right? Trucking companies typically operate with small margins. Last year was the best freight market in history. That's important. We just came off a year that was the best freight market in history, and they generated just 5% margins. And it kind of makes sense. It's a commoditized industry, right? It's a commoditized industry at the end of the day. It doesn't take much to push them over the edge, especially if the owner is basically inexperienced, right? The owner doesn't have a lot of experience behind them. Man, low margin industry, that's a very, very dangerous industry that you can get caught into some big trouble really, really quickly. And you got to really watch yourself, right? And sometimes it's out of the owner's hands. If you have a market where next thing you know, you're under 250 a mile, as an owner, what are you going to do in that situation, right? It's hard to know if and when rates will drop below 250 a mile. I believe spot rates will because volumes are deteriorating unprecedentedly fast. Meanwhile, new carriers continue to flood the market. Tender rejection data shows carriers are losing pricing power and fast. And that's obviously not a good situation. You don't want to be losing your pricing power, right? And so that's kind of if you see this chart here, outbound tender reject rates, essentially, in the United States of America. And here we were in a market that for a long time was or I want to call it a long time, but a pretty good amount of time was no bueno in 2019 and into the beginning part of 2020, right? It was not a great situation. Well, things have been green and very good for quite a while, but now look at this. Flirting with going red once again on this, okay? And that is obviously not a good situation. Now, this person says, I have a client who has a flatbed hauler, and he says he's slammed and making higher rates than ever. Is there any differentiation in the market for flatbed haulers? This gentleman says, yes, flatbed is doing well. It's a different market, he says, right? And so you're looking at all this here, and this is the type of stuff that should definitely concern, I think, everybody watching this video right now, right? If you are talking about these trucking companies, not having as much product to move, you're talking about a situation there that is a sign that the global economy is starting to slow, right? And not really the global economy, but the United States economy. And if you think about, like, I always think like some of the most important companies to pay attention to are companies like FedEx, companies like UPS, the rail card companies, like the train companies, let's call them that, right? Railroads. And the last is trucking companies. And the reason being is these companies are moving product all over the United States of America, and some of those companies are even international companies, right? But they're moving products all over the United States. And so if you start to see some real weakness when it comes to these players, that's obviously the type of thing that makes you say, gosh, man, maybe we're going to go into recession here, right? And this is the type of stuff that I think everybody should pay attention to and think about these sorts of things and just keep it in the back of your mind and pay attention as kind of moving forward. Because if at the end of the day, if the truck volumes aren't there, right, prices drop a ton, trucking companies go bankrupt, and next thing you know, we're in this situation where just a lot of these jobs are lost, right? A lot of jobs are lost. A lot of bankruptcies happen. A lot of debt is just not paid, and that could create even a little more of a systemic risk, right? And remember, when you're talking about an industry being hit hard, it can take down other industries, right? This is why I talk about real estate recently, with mortgage rates going up so much and maybe continue to go up throughout the rest of this year. And you talk about home prices that have gone through the roof and on affordability. If we talk about a real slowing of the housing market in the back half of this year in terms of new orders coming in, and then you talk about that into 23, and let's say it gets a little worse, man, that's a situation where a lot of jobs could be lost. I mean, with how many jobs are created from the real estate industry. And so these are absolutely things you should consider. Now, on the flip side, if we're talking about some good news, well, if you deal with any company that essentially has to ship products, right? And I own some of these companies. I think about some right off the top of my head that are pretty big investments of mine. Tattooed Chef. I think about a Corsair Gaming. Those companies' margins have been decimated because trucking companies have been getting, insane money. Like, the margins are the best. You just heard it. The margins are the best in 2021 that they've ever been in history, right? The best year in history. And so for those sorts of companies, they've been killed by this because they've had to pay through the roof if you want to transport any products, right? Honest is another one that comes to my mind that had their margins killed. But guess what? The glory days of these commoditized industries like trucking and all those sorts of things, it's slowly starting to come to a grinding halt. These are commoditized industries at the end of the day, okay? And so if you think trucking companies are just going to be able to charge whatever they want to charge these companies forever, that's not the way it works, okay? The next shoe that will end up eventually dropping will be essentially overseas freight will be the next thing to drop after kind of this trucking situation happens, okay? And so for any company that needs to transport mass amounts of goods, what you're seeing play out starting now is good news. And this will improve those companies' margins, and this will improve those companies' profitability in a massive way, because those companies, they haven't gotten a break. Those numbers I just showed you there, think about it. If you're any sort of company that deals with shipping of products, man, this is not sustainable, right? You're paying these ridiculous rates. And yes, if you're a trucking company, it's absolutely beautiful and you're making the most money ever, right? The best year ever. That's not sustainable. And in a commoditized industry, you only get those good times for so long. Maybe you get it for, a year, 2 years, 3 years. And then next thing you know, that game starts ending, and companies that obviously ship products start being in the advantage, right? And start saying, no, we're not gonna move those products with you. We got somebody cheaper that's just underbid you over here, and then you start this competition where this guy's underbidding this guy. And in a fragmented industry like this, right, you can start having these companies get real desperate, real fast, and I mean real fast, and it happens real fast. And you saw this gentleman speaking about inexperience with a lot of these folks. Yeah, it happens dang quickly, okay? So this is like a video there where we got some bad news and we got some good news, right? But it's definitely kind of scary from the overall economy perspective there, all right? No, I thought this was a great thing. This is actually a rare post that I see that's just, is a kind of a meme type post, but I thought it was great. It reminds me of a market we're in right now, right? stages of a trader. I could call it stages of investor as well. But, it's like, oh, it looks like a good investment. It looks like a great time to invest. And usually that's when, things are going crazy and prices are near all-time highs, right? All in, and then a small dip comes, and then, folks are like, oh, it's just a healthy correction. And then, it gets real bad, and they're like diamond hands. And then you get this time period that you go through, right, where the stock doesn't do anything. And it's not really like going down in a big way, but it might just be kind of slowly bleeding even more. And this can happen for 3, 6, 9, 12, 18 months, right? And, during this time period, a lot of folks just end up starting to cash, right? They just start to cash, and then shortly after, obviously, things can turn the other way, and that happens in the market. And if I even think about a stock like an Amazon stock, that's been something that's kind of played out, where that's a stock that had a great bull run, and it has been pretty darn boring for a long time. Amazon's a stock that hasn't moved basically since. This stock was $3,200 back in June of 2020. June of 2020 seems like 100 years ago, man. And that's for Amazon stock, right? And so that's a stock that's just kind of been consolidating, chilling out for almost 2 years now. And I think a lot of investors start to kind of get bored, right? And just kind of like, I guess this is kind of time to cash. And when it comes to stocks, you got to understand these sorts of moments, if you're in the right company that still has a great long-term fundamentals that are just getting better over the long term, right? You get this time period where you should love this time period where the stock's doing nothing, because if you got a job, right, and you have more income than expenses, which is the number one key to stock market investing, especially being an individual stock picker, you get to acquire shares over weeks and months and months and months and months and add to your position bigger and bigger, increase your amount of ownership in that company more and more and more and more and more. And right. And as long as you're right about the fundamentals of that company and the revenue continues to increase over the next 5-10 years, and the net income continues to increase over the next 5-10 years, and the gross margins, like as long as all those things play out and you're right about the fundamentals, the gains are going to be extraordinary, and you just have to continue to add shares. And remember, all the shares you continue to add in a company, you're increasing your ownership position of that company. You're becoming a bigger and bigger owner of the underlying company there. And so this is just something a lot of folks don't think about, that I think is very, very important. But this, unfortunately, is just a moment when a lot of people just like, I'm done. After you get the crash, you get those folks to kind of panic sell, and then this part of the market just takes everybody else out. And then all you got left is the real, true diamond hands, and that's about it, guys. Hope you enjoyed this video. As always, let me know if you enjoy an in-depth video that covers different stuff like we just went into with trucking there. I appreciate this gentleman for covering all that. Definitely check out FTX. That will be first, a link in the description down there. And use my code, HolySmokas, as your reference code, or your referral code, and essentially get a free coin when you purchase your first $10 on there. Much love as always, and have a great day.